I'd like to welcome you to this webinar for Picket, fractional property. Thanks for joining. I hope you're having a great Friday afternoon, wherever you are, if it's afternoon in your time zone. It's a lovely day here in Brisbane, Australia, where we're based. I just want to take you through a basic outline of what we're going to cover here today. So like I said in the invitation, we have done 16 months and over $500,000 of research. And what we're going to be looking at today is the 7 things you should keep in mind when you're evaluating something that's a fractional property investment type proposition. And we're going to be looking at that through the optics of when blockchain technology is involved, right? So these are some key considerations that come from the sentiments of market demand and what's possible with this technology. We're also going to look at some of the offerings in the market in this space. And we're going to talk about what we're working on, which is a product called Picket. And it allows overseas investors to invest in $100 segments of Australian residential property. And we're really excited about it. So we'll share a little bit more about it in a second. But a little bit about me, my background. I'm Jace Clamp, and I have sort of a background in digital software as a service, platforms, web. I've worked with as a partner or vendor with Magento, e-commerce, largest e-com platform in the world, and Virgin Australia, very high transaction volume, 50 million a week there. Also owned an agency over in Washington, D.C., worked with government and did a lot of web apps and mobile apps and so forth. I'm a big advocate for product management, so I run an event series in Asia Pacific here in cities like Singapore, Tokyo, Sydney. And it's all about just equipping companies to really better understand customer needs and ship successful product. My goal is I want to see an Australian company in the top 10 global market cap companies in 10 years. It's a big goal, and I think we're going to need a lot of good strategy to get there, and we're going to need some capital. So hopefully we'll be able to get some capital into Picket as sort of the bit of background motivator for why we're doing these webinars. But really what we want to do is just share knowledge that we have gained, because it's really helpful to have. And it also, we can see sort of where things are going, where the trends are going with fractional property investments, especially when blockchain is involved. So really, let's kind of think about what's the problem that the problem space that we're addressing here. It's that, real estate property is the biggest asset class in the world, $217 trillion of assets in real estate globally, owned by less than 13% of people. Less than 2% of it actually changes hands each year. So it's very illiquid. It's difficult to access. There's a high barrier to entry with the down payment. Stops a lot of people getting involved in property as a way of wealth creation. And once they're in, you're locked in, so you might have one investment property, but, kind of a lot is locked into that one property. What if fractional property was fractionalized and able to change hands more easily globally? And that's really the thing that we're contemplating here. Because there's a blockchain basis in this conversation, I wanted to talk a little bit about perceptions of something like Bitcoin. So Bitcoin is a utility currency type token, and the motivation to get into Bitcoin as a cryptocurrency is wild speculative growth, right? And that's, a lot of people have gotten that, right? And it may be a good idea for most people to have some exposure to Bitcoin, right? It's either going to be worth amazing amounts or it's going to be worth nothing, right? So given that, maybe that's a thing. This is an evolution from that which is a utility currency, which is not backed by anything. This is a cryptocurrency that's backed by assets. So the returns you get from investing in that currency are the same returns as what you'd get from the asset behind it. So if you invest in a property crypto token, you're going to get property returns, say 5 to 7%, or whatever the return kind of general growth rate of that area may be, right? So it's a different reason for getting involved. It's these security tokens are actual securities, right? So I want to take a look at what are the 7 things you should be thinking about as you look at this space, right? And the first thing is accessibility. And that simply means, can someone go and buy it? So I've heard a lot of people kind of saying, we've got security tokens, we've got genuine asset-backed tokens. And when you use the word genuine means a regulator can look at that thing and is happy with how it's secured. They're happy with the compliance of that organization, and that retail investors are, correctly disclosed to, and all the compliance measures are there. So, and are these things available to just for someone like me to go and rock up and buy? So I've been, every month or two, I'll go and look, security tokens, and I go to the page. It says, sophisticated investors only, things like that. You can't just buy it, right? So that's number one. Can you just roll up and buy it? Number two, security. Is it possible to see how that asset is secured? Can I read the disclosure documents and actually see how it's secured? There was a company in Switzerland that said, we have tokenized the property. It's, it was sort of like a little commercial property there somewhere in Switzerland. And I looked at it. I could see the tokens. I could see the tokens on the blockchain. I could see the description of the property. And I looked up the title for the property. It's just held privately. Right. So how is that property secured? If I went and bought one of the, first of all, I couldn't even buy a token. And secondly, if I could, how would I know that property is secured? That's really important, right? So I've noticed a tendency in blockchain solutions not to think of the whole product from a consumer standpoint. What do I need to engage in it? For example, I went to a Power Ledger meetup, and I walked in there and I said, okay, I want to buy this. I want to do this. I want to get solar on the house. I want to use your tech to share power and track it and get the returns from that. And they just looked at me funny and said, well, you've got to get your own hardware. You've got to work out your own legals. We just provide the platform, right? So it's not a product, right? If you can't buy it and it's not a full solution in a new space like this, I think it's really important that a provider comes with a full solution. So a customer can just come and engage with it, and it's working and it's ready to go. Number three, not crowdfunding. Okay, so it makes sense to link blockchain with crowdfunding because the legislation and the regulatory aspects around crowdfunding are a little bit more flexible, right? But if you think about a consumer, right, and they want to invest in property, why do they want to invest in property? Maybe they see it as something better options than a savings account. So they want to put their money into something that exists, that's real, that's going to get them a certain expected return, right? They know if they put their money in savings, they get 1.5%. If they put their money in property, they want to definitely get whatever that is, 5 to 7%, right? So crowdfunding, you're investing in something that might be, which is exciting if it's a wristwatch, okay? But if it's this big property and you're waiting for others to join the crowd fund, it doesn't make sense in terms of an actual investment that's going to get you returns. Number four, this one's really important, withdrawing your token. All right, this really gets me. The 99% of what I've seen so far with property tokens that have blockchain is you can't withdraw the token. There's good reason for that because it's a security. And the registry requirements are often that you need to, the regulators say you need to have the token holder registered 100% of the time. So we know who they are and where they are. There's a very good reason for that. But in my mind, the power of blockchain and the way that people have been perceiving, yes, there's this growth thing of Bitcoin, just put that aside. What else can you do with blockchain? You can hold anonymously something that says, here is my record of ownership, right? You can hold that personally in your wallet. All right. So does that thing support withdrawing the token? If it doesn't, it seems to me, and a lot of blockchain people that I've spoken to agree, what's the point of using blockchain when you can't withdraw the token, hold it personally, or trade it peer-to-peer or whatnot, right? It might as well be that your record of ownership is stored in some centralized database because if you can't withdraw the token, your information is centralized with the company anyway. Yes, you can look it up on the blockchain, but what's the point? 5, due diligence. I'm seeing some players come into the market and they say, we're going to be open. Any property can be listed. Any type of asset can be listed and tokenized. Well, I kind of think that's probably a bad idea for a go-to-market, for a new brand that's really wanting to encourage the world to get involved in fractional property, right? To get involved in property token investment, because if any old rubbish can be listed, people are going to get pretty peeved off when they realize that their investment into the property token isn't that great, because the underlying asset was rubbish, right? So that's something that we think is important. That's something that's going to be a part of Picket is, responsibility for the stock, ensuring good stock's listed. And over time, as the market matures and gets more sophisticated in their ability to look at what's available, they can make choices about, what they want to invest in. Transparency, we think, the power of blockchain is to be able to see right through, to have this technology that can let my little fraction of a property, and I can see the exact property I have a share in. That's what blockchain can do. But if you join this kind of pooled fund that, it's got $50 million in it and you've got some part in that pooled fund, what's the point of that, right? What we're going for here, what we're pursuing is we look at properties like companies. So you can buy a share in a company. You can also buy a share in an index fund. That's lots of companies. That's fine, and we'd like to see that happen. But the actual core instrument is just like companies. You can buy a share in a company. You can buy a share in a property. That's what we want to see happen. Number 7, cross-border. Can this thing be interchanged across borders, be purchased by people overseas? That's really hard to do, again, because it's a financial product, it's a security. But how can it be structured, both from a financial product standpoint as well as tech supporting that, whatever the regulations require? We've really worked hard on our solutions so that we can have these aspects in good stead. So I want to take a look at the spectrum of ownership here. So a lot of players I've seen actually are existing a little bit down towards this end of the market, where they're trying to connect a crypto token with something down in the titles or units in a trust type area. I've seen all of that. I've seen tokens connected to parts of title or small titles. I've seen tokens connect directly to units, right? And again, folding in the registry requirements there, it's almost like the token is a token thing, right? It's just, we're going to use blockchain because it sounds great. Kind of what's the point, right? Whereas if you go more towards this up this end of the spectrum, maybe you lose the ability to go and use it as collateral. But if you've got like say it's $100 token, right? Are you really going to go use that as collateral? And also, if you're agreeing to something that, in the disclosure documents, it says this is how we're going to manage the asset, and you're happy with that, do you really need to be able to vote and have control over such a small portion if you can trust how it's being managed and managed well, just like you trust directors of a company to manage that company when you've got a share? I suggest to leverage and utilize some of the benefits of blockchain. Really where you need to be is more towards the synthesis, and where you can provide returns, you can provide exposure, you can get actual real returns from your share in that property, but it's a derivative. A derivative is something that derives its value from something that's underlying. So with Picket, we've thought carefully about having this kind of a property token, who would it be available to and what would they want? So we looked at overseas markets like China. There's a lot of opportunity there. China is the biggest player in crypto type, digital currencies, and that would indicate there's probably going to be comfortability with asset-backed tokens. Also, there's a strong drive for property ownership, but difficulty getting into it. So I think there's some real opportunity there. Also, perhaps crypto holders looking to hedge into something, maybe a portion of their portfolio into something a bit less fluctuating. Being able to shift Bitcoin into property tokens could be a nice thing for them. So we think there's some really interesting target markets for fractional property that is token-based. In terms of just thinking about the customer more broadly, we live in an age where the current generation has grown up comfortable with the idea of not owning things like CDs, cassette tapes, right? So I had cassette tapes when I was young, right? But now, MP3s came in, and now it's on in the cloud, and it's so convenient, right? Got an AirDesker, I can just go and, the WeWork or whatever, and just sit down and work there. Airbnbs, just like rent anything out, go and stay anywhere, not hotels anymore, right? Upwork, you can just connect with anything, Airtasker, just get people to work, get coffee delivered by whoever, I don't own a car. I actually do own a car, but the concept of not owning a car and just using things like Uber, there's a lot of comfort with that. So where does that take us with property ownership, right? Do we really need to break our backs to get into big investment properties when we can do it fractionally? I think that's the trend to really keep in mind. I want to take a look at some of the current players, right? So we've done extensive research on this space and have sort of perspectives on these. This first page here is specific property token providers, especially there's that first couple there, Blockimo and Swiss Real Coin, obviously based in Europe there. So Blockimo is choosing the crowdfunding approach. Again, we said before, we don't think that's appealing to a retail investor, in terms of they want to invest in something that's real, right? There's voting that's kind of folded in, which adds to the complexity of the token versus making it nice and fluid and flexible and exchangeable. And there's no real information currently as to how the property is actually secured. Same for the Swiss Real Coin, and it's not even a security token. So it's a utility token, which they say, it's going to grow wildly. A security token should not grow wildly. It should grow consistently, just like a normal asset would. They've got things like dilution in their fund where there can be dilution, and it's a pooled approach. We don't think that's amazing in terms of the transparency aspect. BrickX is a provider in the Australian market that has been around a while, and I just really have to acknowledge what an amazing job they've done. They've really done the right thing in terms of having an amazingly designed product, and it's been wonderful to learn from BrickX. So a lot of respect to what has been done there. It's kind of maybe came a little early because there's no crypto there. Maybe it kind of limits what could be in terms of global interchange. So you might miss out on the overseas market. And we think that the demand in Australia has been a bit flat for direct digital unit trust type fractional property. It's a closed fund. I think it's 12 or 14 properties. Secondary trading, because it's just this small kind of propriety thing, is not real thriving, and the revenue model that those guys had was sort of based on transaction fees, and that because there hasn't been a lot of trading, it's been a bit of a challenge. But again, a lot of respect for what they've done. Why wouldn't you invest in an ETF? That has property ownership. Well, that kind of it's pooled, doesn't provide the transparency, no ability to withdraw that thing. So there's sort of benefits when you add blockchain as a technology that just imagine this token that it's got backing value, right? But it's still flexible. You can still move it from wallet to wallet. So a couple other ones here: BrickX, Block Square, and Real. Again, we're seeing things like crowdfunding, being tied up with voting, kind of bring your own legals, which is a bit weird, very difficult for anyone to just roll up and do. So let's talk about our solution. I've been talking generally in terms of what's important, what's happening in this space. Our solution, Picket, Australian Residential Property Fund. The property would be rented out, okay? The way that we would do this to make a more flexible token possible is we'd have a European intermediary. Okay, that's something that we're working towards. A company that would actually own the units. The European company would own the units in the fund, the Australian fund, and then that intermediary company would offer the tokens. So that's the special sauce, how we would actually create regulatory approved. The regulator would be in Europe, okay, and that and be able to offer tokens that are compliant, retail, Australian property, but being able to offer them overseas, especially across all of the European Economic Area. Registry maintained on blockchain, obviously, as a genuine security or asset-backed token. The token holders would get their exposure to the share of the net rental yield and gain when the property is sold in 5 to 10 years. So that's a preset amount of time. The whole property would be managed according to whatever's disclosed to the retail investors when they buy that token. So it'd be rented out, by a certain property manager, and be a certain due date, it would be sold, and then the share of that net after tax, after fees and things like that, net gain would be distributed to the token holders. Not crowdfunding. You're investing in something real, right? So that's really what I'm going to go to the market with. This is a real property token. The property exists. How we actually make that happen is through a wholesale fund that sits in the back end, where primary investors actually provide that initial funding to acquire the properties and then sell them out. I won't go into it on this webinar because it's not really relevant, but there's a really amazing opportunity for wholesale investors in a fund like this to see better than normal returns from a typical property fund due to the nature of buying property and selling it out as tokens, kind of cycling their cash, right? And then the tokens can be traded in marketplaces, peer-to-peers, anything that would support a digital security of that type. And I can give examples of that if anyone's interested in hearing more. So this is really a departure of the old world, being tied up with governance, maintenance, taxes, reporting, moving into liquidity, right? Registry of Ownership on blockchain, getting what you want, which is the returns, through a vehicle of tokens. So I want to zero in on sort of the business of Picket, how it would make its money, right? Because again, just to be really transparent, what we are looking for here is funding partners. Picket has an amazing opportunity to scale globally. That's my mission, to see something like that happen. This business has an amazing opportunity to scale. How does it make its money? So the way it would do that is through a listing fee. The biggest revenue stream would be charged up front when properties are tokenized, right? Just a simple fee of the tokenized value, which the reason I like this as a revenue stream is because it kind of mimics what developers, for example, as a property supplier, already paying, right, into refers or whatever to get exits for the property. This is an amazing technology. It's an amazing product because it actually solves a key business problem for developers in terms of giving them brand new exits for property, a whole new sales channel to exit property, right? And not very much different in terms of cost and what they're paying already. So our co-founders are developers. So this is a space we know really well. There would be a transaction fee component because as trading increases, and Picket would provide a secondary trading, and exchange facilities, as that increases over time, there's an amazing revenue stream there. There's fees that could be applied for selling tokens more quickly. Because Picket is also serving as a registry to property funds, there's fees for that charged to the fund and so forth. So really, what we did was we felt, what would the forecast look like if we reached the volume? Say we looked at property funds in the world. We said, okay, the biggest property fund, 250 billion, right? 250 billion. What would it be like over 10 years if Picket was able to facilitate and track towards that as a trading volume? What would the revenue be like, right? So starting out, there's costs involved. Obviously, there's some initial investment and to be paid back, but then going positive, really heading to where year 10, we've got 4 billion, right? Yearly revenue. So, minus cost, that's revenue. And this is a forecast based on the cost model and the revenue streams I just showed. So here it is in graphical form, graph that you've seen. So it's something to get excited about, the opportunity, the global opportunity. Really what we're doing in terms of next steps though, how do we want to validate and prove this? Because we're not going to go from 0 to year 10 and have, amazing revenue. How can we prove this is really a thing? We've got the target market right. We've got our tech and legal right. Got our compliance right? So what we want to do is a pilot project. We have basically, because this is a financial product, it isn't cheap to execute. There is compliance involved. There's a lot involved to this. We have come up with an efficient approach whereby we can execute a 250 grand project and we can tokenize property, which we already have. Our co-founders are going to put in their triplex or so forth, tokenize that. And our goal would be to sell that out very rapidly, right? So if we can sell that tokenized property within a month, say, for example, that time frame, we feel like we'll have good validation. And again, if we can do that overseas, we feel like we'll have great validation on our product and our hypothesis. So that's what we're going to do. If we can find further backers, what we're concerned about here is because if it goes well, we really want to be partnered with co-founders that can support the growth of this initiative because it has so much potential, right? So following that, we would look to add different types of property funds in places like Europe and the USA, and support other asset classes such as commercial. So this has a great application for commercial funds in terms of the ability for a commercial fund to increase funds under management and to be able to exit and provide returns for wholesale investors or whatever type of investors in that fund. So it's not just limited to residential in the long term. I want to talk a little bit about our co-founders. Really enjoyed working with these guys. So Scott Arthur is the main co-founder in Picket. He's got a background in agricultural assets, and also he's one of the co-founders of the highest volume home builder in Queensland called Impact Homes. And yeah, so basically the origin of this whole idea came from Scott, and it came from a place of, hey, we're building homes to help people get into a property investment, but maybe only help 400 to 600 people a year, right? That's not a ton of people being helped. So the big driver for this is how can we help more people get into wealth creation and to benefit from ownership in property? The answer would be, what would it look like if we could break up property into fractions and sell to more people, right? And as a developer, it also is a really nice business solution. So you're helping people, but you're also maybe widening your channel of properties you're able to exit because of this new channel, and maybe selling overseas and things like that. So I came on board to help explore this solution from a digital business tech perspective, and really started to unpack this. It's been great working with Alan as well, because he's got some significant background in finance, capital markets, and has been amazing in terms of really looking closely at what we're doing with our compliance and moving this thing along from a financial products perspective. And he's serving as CFO for Picket. And that's our team at the minute. Where we're at right now is we're raising. So we're looking for 5 additional co-founders to put in 50 grand each, or we could mix that up to actually get equity in the company and to see this move forward. So I'm available to talk a little bit more about this. I just thought I'd show a few screenshots of kind of the concept, prototyping we've done. We've got a lot of groundwork laid from a technical standpoint, an existing platform, existing design collateral, a lot of compliance documentation. This is a lot of work we put into this. But here we see a rendering of Picket in terms of a portal where you can go and explore properties, do investments, track your portfolio, have an exchange, have an on-site wallet, and things like that. I'm available to discuss this further with anyone who wants to take a look at it. I'm reachable through LinkedIn, Jace Clamp on LinkedIn. And again, I'm in the Brisbane, Australia time zone, so very happy to chat with whoever wants to look at this. I might follow up with some of you after this just to see if you'd be interested to go further. But if not, I hope this information has been helpful to you. It's been a pleasure sharing with you today, and I hope you enjoy the rest of your day.